Speaking of plays, here's Playboy that we brought up a couple nights ago. We said to buy on the open, so on this day you probably made nearly 8%. And it's holding above this consolidation pattern that you can see. I've drawn the trend lines in here. MACD looks constructive. Volume's not real hot over here. Maybe we get a pullback to that 200-day moving average in blue over there. Maybe a pullback to this former resistance level, which is now should act as support. So keep an eye on Playboy. All in all, I really like this stock. Here's VMC, and basically VMC, we're seeing again, that lower lows, higher lows, positive divergence, correction through time over here, which is a little bit of a triangle, a breakout again. See the common theme that we're seeing over here is this breakout above the 200-day moving average over there in blue, and people get real excited. You can see, like I said, there's nothing magical about the 200-day moving average, but it does act as support and resistance. See, the 50-day average does the same. So this stock bounced around between these two moving averages because traders are sheep and they all watch the same thing. So there's the breakout. Over here we have materials, construction, building materials, commodities, weak dollar play. That's probably something to keep an eye on over there. Here's an interesting one that I kind of didn't expect, is UPS. Okay, so UPS has had a lot of volatility in price, of course. That common theme, there's that 200-day moving average price bouncing around on the 200-day moving average, correcting laterally through time. There's Federal Express, same thing, okay? Really nice chart there, a lot of volatility. Big, huge move over here with volume. We also got this evening star over here with volume tapering off, so pretty good chance of a reversal, a pullback. Here's the gap. Does it fill the gap? We don't want to see it go down below 72. We'd like to see it maybe fill this gap a little bit. Let's take a look at where the moving averages are, the short moving averages. So if we could get a pullback to pretty much either one of those by the time this 22-day gets up, it'll be around 72. Since we already saw a breakout and a pullback to the 10, the next pullback was to the 22. We'll probably get a pullback to the 22 over here. A big gap, a big move up, volume fading there, so that is very likely going to see a pullback. But interesting, UPS, Federal Express, probably some truckers are doing pretty well too. Let's take a look at AWW, actually AAWW. This is transportation, truckers and stuff like that, transportation, Federal Express. Lateral correction through time over here. Recently, we saw a really nice move here in volume. See the volume? We get this star. So it's likely we'll see a pullback. Now, where this pullback goes to, I don't know. This had a little bit of trouble at resistance up here. That's kind of where we see this star falling. We get a little pullback, and this may have a nice healthy uptrend to keep an eye on. And our next one is NDBC. Just keep saying it. We have this positive divergence, okay? Lower lows in price, higher lows in MACD. I'm using the long MACD. This is a place where smart money is buying, is picking up some shares on the cheap. And then what we will typically see is a breakout. And this breakout is the beginning of stage 2. Stage 1 is accumulation. Stage 2 is markup. They buy it here and they sell it to you as it's going up. They buy a lot of shares. They need demand to sell into. So they're not actually buying typically on the way up, but they're selling. An obvious target would be the 200-day moving average. There's a target for you if you want to take a look at NPBC, which is Northeast Banks. Alright, let's take a look at an airline. And some of these airlines are looking pretty good. US Airways, a 200-day moving average here. You see the breakout above that. Got some volume going there. Let's take a look at flow. companies that have names like Flow, Boom, China, real easy names, these are the ones for some reason that the momentum players like to play. Remember what I said about the 50-day moving average acting as support perfectly over here. Little dip. We have something that looks a little bit like a bull flag, which is a bullish continuation pattern. Got great volume over here, and it looks like it's getting ready to break out through this 200-day moving average. Flow may very well be a momentum play, which means, and value has nothing to do with the price of stocks anymore. It's all perception. But in these cases where we get these momentum plays, this is just really an attack on the market makers. TRID, TRND, long period of sideways correction there, and a nice breakout above that 200-day moving average. We see this golden cross now. This is going to drive a lot of traders crazy. They love that stuff. Volume, though, is not looking real good there. MACD's looking great. So probably we're going to see a little bit of a correction. My guess is that it's going to correct back to the 22-day moving average over here in blue. So keep an eye out for that. A pullback there may offer a very good risk to reward profile. Next we have CRY, and this is another one. These names, I guess because they're easy to remember or whatever, they're momentum stocks typically. CRY, look what happens when they bump through that 200-day moving average. Everybody gets excited, volume picks up, everybody wants to get involved. What we're seeing now is volume moving down, so some kind of correction over here in CRY, but keep an eye on it because this may offer a real good setup, and if you can buy a little bit cheaper, that's great because you can put your stop under that 50-day moving average, or maybe a little bit lower. The next one that I have for you is SOMX. Okay, here's SOMX, and what I want to show you on this one, and this has the look to it of a momentum play, with this huge move up and then a little correction through here. It has the look of that, but what I really want to show you, my 3C indicator over here, it looks pretty good. What looks really amazing is this BOP, this balance of power. Lots of buying all through this stage here, lots of buying in there. Here's 3C. If we look at, let's take a look at an hourly chart. We'll just back up a little bit. Over here, we had the move up, higher highs, lower highs over here, negative divergence. This caused our pullback because what we're seeing here is just pure selling. And another way that you can spot that kind of selling is when a stock makes a tail. And what I mean by that is this kind of huge tail. That means higher prices were tested during the day. They didn't hold, and basically we closed a little bit lower. Still a good close, but that was pretty much the high, and resistance now is somewhere in this level. We're going to have some resistance in this level as well, but we're making this kind of triangle-ish type of pattern, which is a correction through time. More than likely this is going to break out and move up. That golden cross there, the 50 above the 200, it's holding above both moving averages, which is good. It even gapped right through that 200-day moving average on volume. Again and again and again, I hate to keep repeating it, but traders watch this stuff. There's nothing magical about that moving average, but they watch it. Now here's a surprise. AMBAC, which was a stock that just got hammered. I mean, absolutely, from, I don't know, 90 something to some lows of lost 98.6%. That's pretty vicious.